Really, we'll start off with more of the technical front here. What trends are you seeing on the recent price? Because I will say that, again, breaking out to a new all-time high Friday and then completely erasing that strength with velocity as the overall market turned over.
Yeah, big red candle on Friday, but that was across the board in the overall market. I think the first chart we want to take a look at is something to give you a little perspective about what NVIDIA's done since this AI boom started in May of 2023. So we've got a 3-year weekly chart here that we're going to take a look at, and it's kind of reflective of where the stock has come from 3 years ago. You take a look, Jenny, over there, we got a price of about 11 bucks down there 3 years ago, and we've reached those all-time highs above 195.60 on Friday. But as I mentioned, that big red candle here. So you've seen the trajectory of what the AI trade has done for NVIDIA. And remember that May of 2023 is when they beat expectations, started raising guidance. Now let's kind of drill in a little bit farther on a shorter term chart here. We're going to look at a 1-year, 1-day chart. That's got a couple simple moving averages on it and momentum type of studies that we're going to take a look at here. So we've got a 1-year, 1-day chart. Stock is, as of Friday's close, as Jenny mentioned, up about 36% for the year. We're going to be up about another 3% here today. The stock's trading about $188, $189. So that momentum continuing on the stock rebound today. But you can see the 50-day moving average, about 179.15. We didn't quite get to that level on Friday. We got down to about 182, which is about the 20-day simple moving average, which has been an area of support over the last month or so. I think this 179 level is going to be key if we can hold above it. We've saw some movement below that level a couple times over the last couple of months, but we've seen that resurgence in this. Now, will the tariff negotiations impact NVIDIA? Well, they're not reporting any chip sales in China yet on their bottom line and top line, so that doesn't really come into play, but it might have some negative impact. But rebounding nicely here today. I mentioned the RSI. Settled about the 51 level here, so momentum right in the middle. We've seen a downtrend, but that was all from Friday's price action. So keep that in mind. Watch the RSI on that rebound that we're seeing today, but in a tighter range. We're not overbought by any stretch of the imagination. Even when we hit all-time highs, we didn't get above that 70 level, which is considered overbought territory on that relative strength index.
Okay, so my exact point on Friday, I mean, like now for weeks has been, okay, they didn't include any of this potential impact on their earnings call or their guidance. So there's no real revenue to be realized from China that wasn't already, at least, I mean, it would be like just nothing but upside. But someone gave me the counter argument. They're like, well, we have seen shares also trade with basically the expectation that we could see that added impact from China. We could see this additional revenue. So is that pulled forward then on this valuation, which does that create a risk when you look at, like, you know, NVIDIA, for example, trade purposes, with the fact that, yes, while we don't know China's exact expectations for their guidance because they didn't give us any, are we still also anticipating this?
Pre-market, Nvidia jumps 2% as U.S. tariffs on China loosen. As geopolitical concerns subside, the market recovers and Dow futures rise 450 points. The demand for AI and data centers is linked to Nvidia's growth. Reducing tensions increases investor confidence. Nvidia's shares jumped more than 2% in pre-market trade on Monday, indicating a robust recovery. The increase coincided with a general calm on Wall Street following U.S. President Donald Trump's easing of his tough trade policies against China. With Dow futures rising 450 points on Monday, U.S. stock futures also showed an excellent rebound following the announcement, indicating that now is a good opportunity to invest $10K or more in the stock markets. With key tech stocks and indices rebounding from last week's sell-off, Nvidia's stock gains are consistent with a larger market recovery. As investors began to bounce back from last week's losses, Nvidia's stock saw an early Monday bump. Since Nvidia's AI chips and semiconductor technology are crucial for data centers and AI applications, any disruption has a significant impact on the chip maker, which has been in the news due to trade concerns between the U.S. and China. Investors, however, exhaled with relief as President Trump alluded to a more lenient stance on tariffs. The stock outperformed much of the larger tech sector, rising more than 2% in pre-market trade. Since Nvidia has a sizable market in China, Every resolution of trade disputes helps safeguard its earnings and future prospects. The recovery also reflects a broader trend. As tech sentiment improves and geopolitical concerns subside, the market as a whole is rebounding. 2025 has not been a good year for Nvidia. As the chip maker, China's plan put it in the geopolitical crosshairs of the two superpowers. With roughly 13% of its worldwide income and 25% of its graphics unit sales, China is a crucial market for Nvidia. Major Chinese IT companies' data centers and AI infrastructure are powered by Nvidia's state-of-the-art AI chips. The company faces a difficult new obstacle in the region as a result of China's prohibition on specific Nvidia chips. In 2025, in response to growing trade and tech tensions with the U.S., Beijing increased restrictions on U.S.-made AI chips, including some of Nvidia's best models, as part of a larger drive for technological independence. High-performance chips that are essential to Nvidia's range and are utilized in data centers and artificial intelligence are primarily targeted by the ban. Since the restriction restricts access to the Chinese market and upends its regular supply chains, Nvidia is facing some serious difficulties. The business has been modifying its sales approach to deal with this, attempting to maintain some business under stringent guidelines. To comply with export laws, this even entails returning a portion of the money made from sales in China to the U.S. government. Although many lower-end consumer GPUs and older Nvidia models are still available, and there is a thriving secondary repair market in China, it should be highlighted that the ban does not imply Nvidia is totally out of the Chinese market. However, due to export restrictions and more stringent inspections, obtaining the newest, most powerful AI accelerators is extremely difficult and dangerous. As traders cheered President Donald Trump's softer stance on U.S.-China trade, U.S. stock futures surged, improving pre-market mood across key indexes. As investors reduced their concerns about a rapid tariff increase, the Dow futures, S&P 500 futures, and NASDAQ futures all saw gains of roughly 1%, 1%, and 2% in early trade. After traders took the president's remarks as an easing of tensions that had shaken supply chain and technology outlooks, chip names led advances, with Nvidia topping other semiconductor stocks with a 4% leap in pre-market trade. The change came after Mr. Trump's statements on Truth Social over the weekend, which helped calm markets following a big sell-off on Friday, moderated his rhetoric about imposing heavy tariffs on China, and indicated that he was eager to avert a full-scale trade war. The response, according to analysts, shows how sensitive stocks are to rhetoric between the United States and China. Even tepid indications of de-escalation can cause futures and cyclical sectors to quickly bounce. One of Taiwan semiconductor manufacturing's biggest clients is Nvidia. Following the announcement of deals, the shares of a number of competitors have surged. Nvidia continues to dominate the AI computing market in spite of the efforts of others. Over the past few weeks, Nvidia's dominance in AI has been called into question. With OpenAI's recent announcement of a huge contract with Advanced Micro Devices, AMD may be on the verge of overtaking the industry leader in AI investment. That isn't a convincing argument, though, given AMD offered OpenAI a fantastic deal that Nvidia probably wasn't prepared to accept. I believe we'll get some news on October 16th about how strong the demand is for AI computing hardware, and Nvidia is by far the biggest supplier of AI computer hardware. Investors will get a clue about the strength of the semiconductor market when Taiwan Semiconductor Manufacturing releases its quarterly earnings at that time. If TSMC reports excellent results, this might lead to a favorable response from all AI hardware-related stocks, making Nvidia a compelling stock to purchase before October 16th. Investors should be aware that Taiwan Semiconductor is the world's largest chip producer and the company behind both AMD and Nvidia. Therefore, Nvidia is not always performing well just because TSMC releases impressive figures. But since Nvidia is a far bigger client than AMD, I believe it's safe to assume that if TSMC is doing well, so is Nvidia. Although the results of Nvidia's third quarter won't be known until November, the company's supremacy is still evident everywhere. To satisfy the expectations of their clients, a large number of cloud computing businesses are rushing to expand the capacity of their data centers. Many AI developers continue to choose Nvidia's graphics processing units, GPUs, because they are the best in class for powerful general-purpose computing. Although Nvidia is currently the most widely used computer hardware, growing competition from Broadcom's special AI accelerator chips may eventually threaten Nvidia's dominance. AI capital expenditures are predicted to rise sharply over the coming years, regardless of the computing processor that the AI hyperscalers prefer at the moment. Nvidia anticipates that the total capital expenditures for AI data centers would amount to $600 billion this year. By 2030, that amount is anticipated to increase to between $3 trillion and $4 trillion. All businesses in the AI sector will profit from that enormous increase in spending. Nvidia will gain the most because it is by far the largest market share leader, which makes the company an attractive investment at this time. News of processor deals with OpenAI caused both AMD and Broadcom's shares to soar, but this surge has made them far more expensive than Nvidia. Despite far superior performance, Nvidia continues to trade at a discount to its competitors when a variety of forward price-to-earnings (PE) indicators are taken into account. Following reports of a few sales, AMD and Broadcom both saw increases. In the meantime, Nvidia makes a lot more money every quarter than these announcements combined. The merger between Broadcom and OpenAI was worth $10 billion. AMD's acquisition might be worth up to 10% of the company's total valuation, or roughly $34 billion. In the second quarter of fiscal 2026, Nvidia's data center division alone brought in $41.1 billion. This demonstrates that Nvidia is much bigger than these two long-term agreements, therefore investors shouldn't be alarmed. In reality, given the enormous need for AI in the future and Nvidia's low price compared to its competitors, it might be a great long-term investment at the moment. Strong statements made by TSMC on October 16th regarding the long-term stability of chip demand may be all that Nvidia needs to see its price surge, and I believe that investors would be well advised to buy shares before this event. As investors evaluated Nvidia's recent performance, the company's stock witnessed little movement this week. The stock has gained 7% in the last 3 months and 3% in the last month. Taking a broader view, Nvidia's one-year total shareholder return of 32.7% indicates strong long-term momentum that has continued to build on the enthusiasm surrounding AI and semiconductor demand from the previous year. The overall trend is still solidly upward as investors reevaluate the company's prospects following each earnings cycle, despite some choppiness in recent weeks. What else is growing if Nvidia's trajectory has you wondering? The current question is whether the market has already factored in all of Nvidia's projected future growth, or if the company's outstanding returns have caused the stock to trade below its true value. Is there any hope for the future? There is discussion regarding how much growth is priced in, or whether expectations are outpacing reality, since Nvidia's widely regarded fair value is $152 to $63, which is significantly lower than the most recent closing price of $183. Nvidia has performed exceptionally well, but its valuation has naturally climbed due to investor excitement about the company's prospects. The company's stock has surged due to its dominance in the AI and high-performance computing areas, and many analysts still see Nvidia as a promising long-term growth prospect. What mechanism underpins this audacious appraisal? The story claims that it depends on phenomenal revenue growth, staggering profit margins, and hope for next-generation hardware. Find out which forecasts support or contradict this ambitious price goal. With earnings season quickly approaching, a number of the largest names in technology are trying to maintain their momentum. Last quarter, all of these businesses reported impressive earnings, and there are solid indications that this trend will continue into the year's last few months. These equities appear appealing for the long term, as well as for the immediate period leading up to earnings. The results from the previous quarter demonstrated how much demand there has been for Nvidia's chips, which have been at the core of the artificial intelligence (AI) revolution. Despite not having access to the Chinese market, its data center income increased 56% annually as governments and businesses worldwide continue to expand their AI infrastructure at a rapid pace. With cloud computing businesses continuing to invest heavily in data center infrastructure and Oracle announcing significant AI data center spending plans, it appears that this trend is not slowing down. In contrast, Nvidia maintains its market dominance in the AI infrastructure space, where its graphics processing units, GPUs, support AI workloads and account for more than 90% of the market. Since the majority of the early AI code was built on its CUDA software platform, developers continue to choose it, giving it a broad moat in the market. Nvidia's growth trajectory appears to be intact as long as data center spending stays high and demand for AI continues to exceed supply. The business is better positioned than any of its competitors to profit from the next phase of the AI infrastructure build-out, and it has already demonstrated that it can consistently produce positive surprises. While keeping its buy recommendation, Goldman Sachs increased its price objective for Nvidia from $200 to $200. The update comes after Nvidia's strong alliances, especially with businesses like OpenAI and other key partners, and its faster growth in AI-related sales. According to Goldman Sachs, Nvidia's fundamentals will see short-term strength due to growth from both traditional and hyperscaler customers. James Schneider, the analyst, attributes the substantial upside to 2026 projections to Nvidia's partnerships and investments. These include agreements with OpenAI, unorthodox buyers joining the market, and infrastructure expansions. The bank anticipates that additional hyperscaler spending and the introduction of the new Blackwell chip will further accelerate market momentum into the upcoming year. Based on updated earnings per share, EPS, expectations, its valuation model maintains a PE multiple of 35x. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
And that's the thing. Jensen Huang's kind of come out and said, hey, we need to open up our sales to China. Chinese government's pushing back on that. So I'm not sure what type of impact that's going to have. But watch the investment numbers. We continue to see investment in AI. And until that pulls back, I don't think there's any AI bubble. But let's get to this example trade because it's a neutral to bullish trade. It's a little bit more passive. You're still taking an upside exposure on this trade, but giving yourself a real big cushion if you think the stock is going to remain above a specific strike. Remember, it's not immune to pullbacks in the overall market, so you've got to take that into context. So I looked at a cash secured put here. It's neutral to bullish in stance, where I'm going to go out to the October 31st weekly options that expire in 18 days. This is one of those strategies you can do on a week-to-week or bi-weekly or monthly basis if you think the stock's going to remain above a specific level. So we went out to that October 31st weekly options. We're going to sell the 175 strike put, cash secured put. It's a naked put, right? So you've got a lot of risk to the downside here if the stock were to somehow go to zero, which most likely will not happen. But you're going to sell this 175 strike put. If the stock opens up here about 188, you're going to collect a credit of about 350. That's what you can make on this trade, $350 per spread. Right? But it takes your break even all the way down to 171.50 to the downside. That's about 9% from where the stock is going to open up. So you have that big cushion. You have a higher probability of success. Now this trade is twofold, right? A lot of risk to the downside, right, if it goes through 175. But this is one of those strategies you can do if you think, hey, I either want to collect that credit of 350 on elevated volatility on that sell-off we had Friday, or if the stock does fall below 175, I'm willing to buy the shares at a 9% discount to where it's currently trading. So it's a high capital type of neutral to bullish position with the expectations I'm either keeping that credit that I collected or I'm willing to buy the shares if it falls below 175 at expiration and you're still short that put, you'll get a sign. So keep that in mind. But this might be the way that you look at it when, hey, I can do this repeatedly if I think that stock's going to stay above 175. Just keep collecting credits.
Okay, and this name also poised for about a 3% pop, at least as far as futures markets are implying right now. So a lot to watch for Nvidia today, as we typically do, as it's a great read.
Morning, let's bring in Kevin Green, who joins me now for the data download. And we have snapped back this morning after that real sell-off we saw on Friday. What is your biggest takeaway from what we got on Friday, hitting the panic button, then obviously Trump's softening stance over the weekend and the reaction we're seeing this morning? Kevin, good morning to you.
Good morning, Sam. Yeah, it looked like Friday, obviously the tariff commentary to start the day off here did create a pretty decent sell-off in the S&P 500 as well as the NASDAQ, but it seems like the market was probably primed to try to de-risk a little bit, and maybe this tariff commentary was the reason to do so. Now, we did actually break some key technical structures on the S&P 500, breaking that 20-day moving average, and the E-mini S&P futures pretty much hit on the 50-day moving average at the end of the closing session on Friday here, and we are seeing a nice little bounce back, maybe a little bit of a walk back from Trump's hardline commentary that we heard on Friday. Started seeing maybe some optimism over the weekend, and this is where we are seeing some buyers really trying to step in. We also have some AI news in the utility front, which is also creating a little bit of a bid in that space as well. Bloom Energy catching a pretty decent move to the upside because of a deal. Oklo is now trading, I believe, at 160 if I'm not mistaken, and then you also have technology as well as consumer discretionary also leading the way here. So 70% of the stocks in the green so far. Let's see if this holds. This is the big risk that you have. Do we now have former areas of support turning into an area of resistance, and do we see the market really trying to break down, or was Friday a little bit more of a blip on the radar? I think that remains to be seen here.
Oh, absolutely. I mean, as we saw on Friday, it just takes one Truth Social post to really see the vulnerability in this market. You mentioned, as we get up and running for trade today, we've had some more deals in the AI space with OpenAI, Broadcom, also with regards to Bloom Energy as well. So there are a few things helping put the wind back in the sails of markets today. How are you thinking about the government shutdown? Now, how do you think the markets are sort of thinking about this right now, given that we're in day 13? I believe we're not going to get that CPI report now, October 24th, which takes us just days before that next Fed meeting.
Yeah, well, the government shutdown doesn't seem like the commentary from both sides is actually gaining any type of traction at this point in time. And so until we actually start hearing that, I think the market for now is kind of discounting the shutdown. We have seen, for the most part, we've been able to hold up. Yields have not blown out to the upside either. And we will continue to see revenue raises or even debt raises from the U.S. Treasury. So that does not stop. And I think that's also a very key area for the market. But if we start seeing this going past, let's say even this week, Sam, then you start having an issue when it comes to the labor market, lack of payments when it comes to federal workers as well, and that could also hit the consumer discretionary as well as pretty much almost every sector out there that the consumer is really involved in. And I think the market's really kind of pricing that in, and that's another reason why we're not seeing this kind of back off when it comes to the rate cut expectations for the October meeting, which is going to be at the end of October, as well as December. So no headway there, but at the end of the day, markets once again been discounting it, at least for now. I think the big risk that you have is when we do kind of get the government up and running, that flood of data that we've been missing for the last 2 weeks or so, once it kind of hits the market, how quickly can we digest that? And does it really paint a picture, the same type of picture that we saw before the government's shutdown? I think that's going to be very key for us here. But the market, once again, shrugging it off, at least for now. But once we start getting towards 3 weeks in, that's when you start questioning the real fundamental impact. And then do we also see fiscal spending packages increase in order to stave off some of the impacts from this government shutdown as well?